I am the CEO of a company called Rio DeFi, and we're a blockchain technology company that is committed to helping the world transition from the more traditional financial systems to decentralized finance. And so to do that, we're bridging the gap between the two by working with banks rather than against them to help the masses get access to digital assets. And so today, the talk that I'd like to give just briefly and then open it up to questions so we can all have like a roundtable discussion about the future of decentralized finance. So the global wealth distribution right now is very skewed. You can see from this pyramid chart, this is from 2015, that 0.7% of people in the world hold about 45% of the world's wealth, followed by 7.4% that hold, and that's over $100 trillion. 7.4% of the people own about 39.4% of the world's wealth, from $100,000 to $1 million. And those that hold $10,000 to $100,000, that represents about 12.5% of the world's wealth. And that's about 21% of people. And then 71% of people have less than $10,000 in assets in their bank account or to their name, including like cars and homes and things like this. So this is from Statista, so I'm sort of trusting this data, Credit Suisse Global, but this was in the Wealth Data Book from 2015. So and I'm sure over the past few years this has probably gotten worse because you have this inequality. Now, inequality isn't always a bad thing. It allows for meritocracy to sort of emerge and allows for, people to sort of rise to the top. But I think where the issue lies is that in the traditional financial system, there is a lot of cronyism and there's a lot of, political involvement. And so you have these systems whereby people capture through regulatory and other means the control over the system, and then they can sort of direct the flow of funds to themselves. So Samir was talking a lot about, some of this potential inflation that we're going to see. The Fed's printing, $6 trillion recently and injecting it into the economy in various ways. And, now we see nation states all around the world doing the same thing, right? Because you have the markets have this sort of temporary shock, hopefully temporary, right? But so the central banks are doing everything they can to sort of combat that, but it ends up that the money generally flows first to the banks. They're supposed to get it out to the people. It's a small portion of it is flowing to the people themselves. So what can we do about this? Well, distributed ledger technology, blockchain technology is a means of having the people have access to their own wealth, and you can have digital assets stored on various devices, on your computer, on your mobile phone, and you can have the ability to trade value with other people without the need of any trusted intermediaries. So you don't need a central bank, you don't need a government to give your approval to send value across the world. And so I'm guessing pretty much everyone here is familiar with cryptocurrencies, but if not, please let me know and I can sort of talk to that a little bit. But basically we have, these different types of systems. So the centralized system, you have a focal point and then everything shoots out. You have decentralized systems with different sort of nodes and hubs, if you will, and then distributed systems are all sort of interconnected. And so these distributed networks are what we are looking at with blockchains. And so, before we get to the future, what is the past in regards to finance? So the first value system was bartering, right? People would have to trade amongst themselves, but then you had the issues with that, right? Like if you wanted a chicken and someone else had they only had, cloth, that's not going to help you out if you're hungry, right? So bartering was inefficient. And then you move toward money systems. So you have coins, you have seashells, you have gold, and good money is scarce, it's fungible, it's a store of value. You probably all have heard about this. So money is the system societies use to assign value and pay for goods and services. So it's a unit of count, and it's the best forms of money are generated through, or money you could say is generated through credit oftentimes. So this is, my trustworthiness as a human, and banks have become really good at assessing this, right? So you have the credit scoring agencies, you have the banks that assess whether or not they can give you a loan for, purchasing a house or a car or this kind of thing. And so it's this system that's developed to ensure that people can pay back their promises, right? But as mentioned before, with some of this, money printing and everything else, you have this situation whereby some governments around the world historically have printed far too much money. And so the Bank of Zimbabwe, they had these $1 trillion notes eventually, and it caused, these are the $1 million notes. And I think they eventually, you have these billionaires, trillionaires who are starving, and it's because the money became worthless. And so this is something that is a risk with fiat monetary systems and government controlled systems. So you had Lehman Brothers in 2008. I think we're heading toward more massive collapses now. But Bitcoin was created to solve this, right? So it's a peer-to-peer cash system, and it's removing the need for central banks and governments, allowing the people to transact amongst themselves. So I'm going to skip through here. Ethereum emerged as a smart contract platform, and basically this allows you to take that money through Bitcoin or other cryptocurrencies and create a programmable system of money where you can have these contracts that execute based on computer logic. So if then statements, if this happens, then trigger this action. And so you can have this sort of automated system whereby a value can transact very quickly, very efficiently, without the need for humans to interact with this outside of the initial writing of the code. So Ethereum is a general purpose blockchain for smart contracts on which decentralized applications or dApps can be built. So this is just a little bit about how dApps work. You have front end, you have the back end code, and then the back end code connects with the blockchain. So I want to give a tool here real quick. It's dApp.com. It's a great website where you can find all these different decentralized applications for doing savings, lending. You can take out loans through the cryptocurrencies using other cryptocurrencies as collateral, which has become a big trend. And so, what is decentralized finance? What is DeFi? It's this ability to trade and take out loans and earn interest directly from peer-to-peer transactions rather than having to go through a bank. So you don't have the same level of centralization. So some top predictions for DeFi coming up. So I think one, you're going to see some of the traditional players like Robinhood, SoFi, Revolut, Square are going to enter the crypto race. And once they've seen how things play out. So Square has already started moving in that space, and a number of other players will likely follow soon. I think risk management is going to be a huge thing. So the importance of complying with regulations in order to protect people's funds. And you have, systemic threats, as we've seen recently, especially these past few weeks for people in the cryptocurrency space. There have been a lot of exploits on DeFi protocols. And so thankfully, one of the hackers who stole $25 million, they returned the funds because their IP address was tracked by, I think it was the Singaporean government. So they made a point of returning the funds so that if they do get caught, that hopefully, they'll be lenient. But, you have these situations where if you don't have like a bank or a trusted third party in the middle, it does make it a little bit like the Wild West for a lot of people, because it's like, if my assets are gone, who do I point the finger at? Who's to blame? Especially if it was an exploit on some piece of code, like there might not actually be any responsible party that can give you a refund for these things. And so that's why I think a lot of people have stayed away from cryptocurrency so far, and especially away from DeFi, is because there have been these, it's newer tech. There are threats. There isn't the security that people have come to rely on from the banking institutions that give them, not only protection, especially like in the US, for instance, there's the Federal Reserve, which backs the assets up to, I think it's 150,000 or 250,000 in deposits. And there's also insurance systems. So for instance, Lloyd's of London has started to actually provide insurance for certain cryptocurrency firms and custodians and these kinds of things. So I think this will be a trend to watch in the space, because I think more of this is going to happen. Yes, the FDIC. Thanks, Joe. Good call. And so then, oops. Sorry, my chat got in the way here. So the software of decentralized finance will be replicated by central banks and governments and launched nationally. So not exactly DeFi, but they'll take some of the same smart contracts, they'll take the same blockchain systems, and they'll start applying it for government-based central bank digital currencies. So we're already starting to see this. China has just launched in test mode its central bank digital currency, the DEP. And so this is a digital renminbi that is going to directly be used by citizens, really, at the end of the day. And that's kind of a scary thing for people that are concerned about financial privacy, because basically everything can be tracked. So, while it is super convenient and it allows, people to be able to see the source of their funds and everything else, it could be very intrusive to financial privacy if the government can see absolutely everything that you're doing. And the US government is probably attempting to do this as well. And that's definitely one of the major concerns people have about Facebook's Libra, this, blockchain network that they're creating. They've had, they originally had Visa, MasterCard, and all these other people be part of the Libra network, and some have since left because they got a lot of scrutiny from Congress and this kind of thing. So another thing we'll start to see soon in the next few years is real world assets really being brought onto the blockchain. So this is happening now with a company called Synthetics. They're bringing stocks and gold and other assets onto the blockchain. There's also gold-backed stablecoins, a number of those out in the marketplace. Another thing is Bitcoin actually coming on to the DeFi network. So rather than competing with Bitcoin, it's sort of the grandfather of all cryptocurrencies. So I think the DeFi protocols, they've already created a wrapped Bitcoin. That's a version of Bitcoin that's on the Ethereum blockchain. And even more Bitcoin will join the DeFi ecosystem very soon. And so real quick, before I open up to questions and sort of open discussion, is I just want to share with you all some tools for getting more into the DeFi space. So this is DeFiMarketCap.io. You can see there are almost $1.5 billion worth of assets in the DeFi ecosystem. So this is mostly on Ethereum blockchain. This is stablecoinindex.com, and this is where you can see the market caps of various stablecoins. The top one right now being Tether with a market cap of $8.14 billion on there. And this is Synthetics. So this is those synthetic assets I was talking about before. So this is allowing, basically liquidity pools. People can upload sort of the proof of assets onto the Ethereum blockchain through this protocol, and then users can trade amongst synthetic versions of that. Another thing is DeFiScore.io. So this enables a comparison. It's a comparison site for different interest rates across the various assets in the DeFi ecosystem. So you can see Compound listed here. That's compound.finance, which is on a future slide. And then stakingrewards.com also has comparisons of different assets that you can stake. And so a lot of these blockchain protocols have implemented proof of stake or some sort of staking system whereby you can lock up your assets and you can generate an interest rate because they have inflation in the underlying assets. And so this enables the person themselves to be able to, lock up the assets. If they have the technological capabilities to do it themselves, they can, or they can outsource that to different third parties. So some of these sites allow you to find where the best place might be to stake these assets are. And so this is compound.finance. It allows various protocols to build on top of it and create interest generating, it's like savings and lending protocol. And that's all I have for my presentation. So I'd love to have a conversation with everyone and just, what questions do you have, or, what are your thoughts on DeFi in general?
Thanks, James, for this overview of blockchain and DeFi space. I have a question regarding decentralized finance. Where do you think lie the greatest benefits for people, for society in general, with decentralized finance services compared to traditional financial services, let's say?
Sure. I think one of the benefits of decentralized financial services is that you can have much higher interest rates compared to traditional services. So there's sort of two things in DeFi. So there's, some people call it CeFi or centralized finance, but it's intermediaries in the cryptocurrency space that also allow you to save crypto assets such as stable coins. So you can actually generate up between like 6 to 10% on various dollar-based assets right now. So if you compare that to traditional bank accounts or savings accounts, some of them you can get like between 1 to 2% in the US, but in Europe, it's negative interest rates. So you're actually losing money if you keep too many of your assets in the bank, which is absolutely crazy. I mean, it used to be that you could just save or buy treasury bonds with various governments or these kinds of things to generate a yield, because the banks go and they take your money and they loan it out. In the US, they can actually loan it about 9 times over. So, you give them $1,000, they can make 9,000 additional dollars worth of loans. So it's like 10x basically. And, this fractional reserve system is great for creating money, and it's great for giving credit to the markets. But unfortunately, most of those benefits go to well-connected bankers or, the shareholders of banks, which, a lot of those are privatized, or, certainly they were, the way the banks gave out the shares at the beginning, very privatized. So, yeah, I think that's why we've seen a lot of wealth disparity in the world. And now with decentralized finance, it's allowing someone with just $10 can already start to earn interest on that at 5 to 10% interest rates, which is pretty powerful, I would say. So to me, that's one of the biggest things. And also just having access to send money across borders with very low fees, because right now, if you want to send a wire transfer globally with most banks, that's somewhere between $25 to $35 usually. But with cryptocurrency, you can do it for less than $1. So I think that is a huge benefit that, I'm going to stop sharing here. I think that's a huge benefit that is going to help a lot of people, especially the workers in various countries who travel abroad, they make money and then they send it home to their family. They're getting killed in fees, absolutely killed. It's usually between 8% of their income goes to cross-border remittance fees. And what if that 8% could go toward helping their family build a better life, right? So this is one of the things that cryptocurrency can help with. Oops, I'm seeing a lot of questions.
I have a question.
Yeah, sure.
Yeah, I have a question. I don't know if you said, I just joined like just a few minutes back. I use Salt. Okay, I use Salt, and do we have to send the money in their wallet, in the crypto? I mean the those guys who provide us the interest on the cryptos and keep our cryptos with them, or can we put it in our wallet? The main thing is security right now, because if
Yeah.
like exchanges, they close down anytime and you lose all the money. So is there any way to safely keep the money with us in our wallet? If that company goes down bust, we don't lose the whole investment.
Sure. Did you say salt as in like salt lending or?
Yeah, salt lending. I use salt lending, and I mean, the main problem with this crypto lending and also the exchanges is that losing the money when they go bust. I lost some money.
Sure, sure.
Which so the main worry is right now is what's the safest way to manage risk?
Sure. Well, it definitely depends on your risk appetite and your trust in the various companies out there. There are a lot, though, that are non-custodial, so you have control of your assets the entire time. I believe Trust Wallet is one of those such players. So basically, this allows you to access staking without. Oops, I'm getting some background noise. 1 second. Yeah, so there are various companies out there that allow you to interact with through the Ethereum blockchain, primarily to access savings that are not you're not actually trusting them with your funds. It's the private keys for the assets remain in your hands, and the assets don't really leave your possession.
Okay.
So I would recommend those, especially. The trade-off is usually that they have lower yields, so the interest rates are less versus sort of the trusted custodians like, for instance, Celsius, Nexo, BlockFi, some of these players. And it's something that Rio DeFi will be offering in the future as well, is savings and lending. And so a lot of these people do have, at least when they have the assets in custody, there's a trusted third party, such as BitGo or other crypto custodians that provide safekeeping of the funds. And a lot of those funds are insured. So I think that's a big thing that's been increasing in the space more recently, is getting insurance. If there is some sort of technical risk, or if the company were to go out of business or something, that the funds can remain there. But it certainly is a risk with these centralized exchanges. So what we're doing at Rio DeFi is we're moving toward a more fully decentralized system. And I think a lot of companies are doing that as well. And of course, some already exist.
Okay, thanks a lot.
Absolutely. So I see Calvin asked a question in here in the chat. Interesting. Do you think DeFi can disrupt traditional finance, and how safe is DeFi? So yeah, I definitely think DeFi has the potential to disrupt traditional finance. I think the best way it can do that is by taking the approach of working alongside traditional finance, because traditional finance does have a lot of things that users have really come to love and rely on, which is the secure storage of the funds, insurance on those funds, such as the FDIC insurance and other contracts, as I mentioned before. And then easy account recovery options, right? Like if you lose your crypto private keys, then you lose access to the wallet. And for a lot of people, that's not acceptable, right? They don't want it, especially if they didn't back it up properly the first time, or if somehow they lose the key. I had a friend who lost his private key for a few years. Thankfully, he found it, but it had like $20,000+ worth of assets on it, and he was freaking out about it, right? So, this is one of the reasons that there hasn't been more mainstream adoption of cryptocurrencies. So I think what we need in order to have DeFi really disrupt traditional finance is to have those same practices, to have secure storage of funds, to have account recovery options, to have insurance on the assets, to have very simple and easy to use applications. Because right now, the decentralized applications are unfortunately built by geeks for geeks, and I'm a geek myself. So, I understand. And like, you know, I've played around with a lot of the applications and I find them frustrating. And so I'm like, would I ever do this if I weren't already in the crypto space? Absolutely not, probably. You know, and so I think that's been one of the main hurdles to a more mass adoption of cryptocurrencies, that and the safety. You know, with all these hacks, with all these exploits, it creates a lot of fear and doubt around cryptocurrency. So I think the space still has a lot of maturing to do, but I think that's definitely something that's going to be a trend in the next couple of years, to see DeFi make more of a move into the mainstream. Can DeFi be regulated by the FDIC? It can be regulated by certain monetary authorities around the world. So the US SEC has sort of regulated portions of decentralized finance, such as fundraising, right? So you had these ICOs, initial coin offerings, to help companies raise money outside of the traditional fundraising, you know, IPO or private raises. And you saw a lot of growth and a lot of innovation through these ICOs, but you also saw a lot of scams. And so government regulators have around the world have stepped in to sort of clamp down on that fundraising model, and also on things like savings and lending and these sorts of things, because they see it as, you know, part of their purview to protect the average person, and it certainly is. So, you know, we could have a discussion in terms of, did they go too far or did they not go far enough, and this kind of thing. But I definitely think that one of the key trends over the next couple of years in cryptocurrency will be complying with regulatory authorities across the world, and really working within those guidelines, because there's a lot of good to be had in that, in those systems, which is that you have audits on where the funds are being stored, where they're going. You have known like founders, and you can actually see what you're contributing to, and these sorts of basic things that unfortunately were kind of left by the wayside during some of the ICO boom. And so it created this huge boom and bust, which, you know, you saw cryptocurrencies go almost to $1 trillion in market cap back in early 2018, and then it crashed down to right around 100 billion. So let's see, what is your view on DeFi versus, I see 5 minutes ago, yep, almost out of time here. What's your view on DeFi versus Bitcoin and Bitcoin maximalists? What do you think of the effort of new oracles such as Wrap BTC and potentials enablers of cross-chain functionality? Great question, Nick, or I'm not sure if I'm saying your name right, but Nick Vendor. So yeah, I think DeFi, Bitcoin will be a key piece of DeFi moving forward. I think having wrapped Bitcoin is great. I think having other DeFi assets on various blockchains, not just Ethereum, will be really important moving forward, because Bitcoin is where most of the market cap of cryptocurrencies are right now. It's the store of value. It's sort of digital gold, right? So I think, especially with all this fiat money printing around the world, governments everywhere, I think Bitcoin's going to continue to increase in value. It might go crazy in the short term. You know, we have the halvening coming up for those sort of in the crypto space. The amount of Bitcoin that will be rewarded to miners every time a block is mined is going to cut in half. And so historically, that has led to a huge price increase in Bitcoin over time. So I think it might drop in the short term. I don't know for sure, but I think in the next 1 year from now, it'll probably, my guess is it'll be past the previous all-time high of 20,000 or thereabouts. So in terms of cross-chain functionality, I absolutely think this is essential for blockchain to continue moving forward. So with that, I'm out of time, and I'll pass it on to Felix. Thank you everyone for joining in and listening.